Hi guys, welcome back to my YouTube channel. So in today's video, we are going to go over trend and talk about trend because I feel like a lot of people are so confused about direction. And honestly, the most important thing when you're learning how to trade is direction. Because obviously you don't want to buy in a seller's market and you don't want to sell in a buyer's market. So you want to figure out what the exact trend is. You can counter trend trade. That's totally fine. You can go against the trend. But to be honest, when you're first learning, it's best to follow what the overall trend is. But we can talk about the differences and where you would buy and where you would sell based off the left-hand side and based off the different time frames. This was the most confusing part for me when I first started, because I looked at so many different things and so many different people said different things and it just didn't make sense. And like I told you guys, how I learned this is I back tested the market. I unlearned everything that I was taught and I figured it out by literally just back testing. Honestly, it took me about a year. And so that's when I really figured out how the market moves. So I'm going to show you how my version of it and how I find the trend. So looking at a higher time frame, let me just delete all the drawings. This is USD CAD, decided to do USD CAD. So looking at the higher time frames, we're going to get our overall trend. So on the daily, we can see that USD CAD is super bullish. The US dollar is very strong against the Canadian dollar. We're at 1.43. So that's a huge difference. So basically what that means is if you're coming to Canada and you're from the US and you're making US dollars, you get like 40% more for your money. If a Canadian is traveling to US, they're paying like 40 plus more percent, which is crazy, which is so shitty. The Canadian dollar is like seriously a peso now, so it's not good. But anyway, so the overall trend on the daily is bullish. If we look on the weekly, it's bullish. If we look on the monthly, it's obviously bullish and it's probably going to tap into these wicks and then reverse. So we know on the higher time frames, the trend is bullish. Now, we're not working with the daily in regards to entering off of it. We're just looking at what the trend is. You can plot out certain daily areas of reversal, obviously, especially like in here, so on and so on. This is just telling you that it's continuing to break up in a bullish trend. But realistically, I don't do much with the daily, weekly, or monthly. I just kind of look at it and then I start with my 4-hour time frame. So 4-hour time frame, for example, we're going to identify the high. So the high in this case, this was the first rejection. And then basically based off the left, if you can't see anything on the left because it hasn't been here since 2020, you can go on the weekly and you can kind of see if there's any rejections. And then as well as that, and you can also break it down, but as well as that, you can focus on what exact numbers it's at. So looking at the 4-hour time frame, basically we have we can put in the prices here. And then this basically was manipulation. It tried to break past this number and then basically it fell. So we were in a range here. So this was 43, which is what we're tapping in currently. So this is 43, what we're trying to break. And it was in a range here since December 18th. So it's been a month since it's been ranging. It tried to break out last week. It basically came to the 44,800 and then it ended up reversing. So I cannot expose my entire strategy on YouTube, obviously. I get my personal members to sign a non-disclosure agreement because I have figured out a system with the numbers where it will hit a specific price and it will reverse, or you'll know it will hit a specific price and it will be another added position. Like there's things I have figured out that I can't expose to the public, but if you're really wanting to figure out the number system that I talk about and really trying to make your life more simple and your strategy and system more simple, then for sure feel free to join if you can afford it. So basically it comes to the 800, so it makes 2 reactions, 1, 2, and then it ends up respecting. So I actually took this sell this morning, and I'm waiting for it to actually break this 43 area right here. If it doesn't break, then basically we're going to correct and we're going to fill this imbalance eventually. So point being for the trend. So we know overall that the trend is bullish, but at this point it ended up rejecting and it ended up coming down. And then basically what ended up happening, this is another close to 5, 43.5. So it tested in 1, 2, 3, couldn't break below, actually filled this imbalance. So this is an imbalance fill right here. So as you can see, it filled this imbalance, tapped in 1, 2, 3, and then reversed to the upside. So based off this price, so let's just say the 2 prices, 526 and 483, if that can't break above those prices, which it tried to but then failed, we can put in a sell setup. Now, you might be thinking, okay, well, shouldn't we enter buys? Yes, you can enter buys at major structure, especially the 43. But if you're looking at that time of day and you're wanting to, like, let's just say enter this trade, basically we would monitor it on the 1 hour and we would wait for it to close on a lower time frame. So like the 15 minutes good, 10 minute, 5 minute. So you'd wait for this to close below. And then this would be the retest in. So it's coming up again, but this would be your entry. And then once you have this entry, so I'll show you. Once you have this entry, you can put your stop loss above. Again, I do between 15 to 30 pips, sometimes more, just depending on what time I'm entering in on, just because my time zone sucks. But usually I won't, majority of the time, like 98% of the time, I will not use a stop loss more than 30 pips, just depending on where I'm entering, what time, etc. Your stop loss is there for you to just in case you're going in the wrong direction, right? So you don't want it super tight. I know it gives you more of a risk to reward, but you're not trying to get stopped out and then it go in your direction that you thought originally. You're trying to avoid that completely. So don't like stress too much about the stop loss. Give it a little bit of room. So once you take the entry and once this closes below that price, we go back up on the 1 hour time frame and then we can figure out, okay, well, where are our target areas? You never stay on the lower time frames unless you're scalping, but we're not going to scalp. We are going to day trade. We are going to intertrade or swing. Scalping is too much staring at the screens and it's just, I personally don't like it. If you do, great. Like it's totally up to you. In that case, if you are scalping, then yeah, you can take a quick trade and get out of it, but it just makes sense to hold, honestly. Why wouldn't you hold it? If you like, you can literally take one trade and be done for the day rather than taking multiple trades scalping. That's when you're risking too much and it's less reward, personally, is what I think, but that's me. So we have our zones in place. So we're getting the numbers from the left of structure again. So these areas in here, obviously there's a lot. You can put numbers in here like this. You can put 2 or 3 prices, or you can draw a zone. It's totally up to you. Such a personal preference. So obviously we need to know that 305 and 273 have to break below in order for this to continue lower. And then basically you can have as many numbers in here as possible. It's totally up to you, just to make sure that it's going to continue to break. So it's kind of like confirmation, and visually you can see that these prices are breaking. So I know a lot of people don't teach this. They don't like emphasize on looking at the numbers or the prices, and I'm completely different because I've studied this for a long time, and the numbers matter because that's where the money is going in and out of. So it's super important that you study that. So for example, we need 305 and 273 to break below. So it ends up breaking below. It ends up testing into this minor structure. I just added in This because I was thinking it was going to react, because if you measure between each zone, that's like 50 pips. You want to have at least some price in here. So we have to make sure that that price stays below. So it ended up staying below. It ended up coming up for a correction and then ended up breaking below. Okay, so for our target, this was like a potential target, making sure that this does break. You're not going to actually set your TP unless you can't look at the market, but you're just going to kind of manually drag it down as the pair is moving. So it stayed below 44. Okay, our next numbers are 827 and 779. Okay, perfect. So this ends up breaking and testing structure. Okay, great. And then our next numbers would be here. Well, that obviously went through, and then this tapped into the T at this number based off the left-hand side. Okay, so now these two prices have to stay below, like the 43 has to stay below, or basically it'll come back up. And what will happen is this imbalance will fill, and this imbalance will fill as well. So imbalances, to me, again, everything I teach, it's just what I've experienced and what I've studied and what I've figured out. So someone else that has taught you or whatever might do it differently, but this is what I know works and is very profitable. So anything I say, just remember that. It's my own thing. So if we stay above the 43, then we'll continue up. If we break below the 43, these two prices need to break below in order for it to continue down to this next structure, okay? So in regards to the trend, we know that here's a sell based off the left-hand side of the reversal, okay? So it comes up to the exact price again. Here's another sell. And then we actually have another minor zone in here. Realistically, you can take this sell in the minor zone based off the left, because this also sold off, but you have to understand that it only lasts a specific amount of time because of the fact you can see that multiple times it reversed, okay? So if you took a trade late, because this one you would have to get this on like a 5-minute, you'd have to be really prepared. But let's just say you get it here. This you would have to break down to the 5-minute or one, get it off the same price as here, here, and here. And then basically you would just follow through as well. So this would be 52 pips. That would be a 1 to 4. That's fine. I wouldn't take anything less than a 1 to 3 personally. So this structure would have to break. So it came up and tested in again. So if you could see that it wasn't breaking below, you could take profit and then re-enter at the same price. And then basically it continues down to those next two prices. In order for it to hit that major zone, it would have to break. It didn't. That would have been a 1 to 781, and then it continues. So you can always get in minor structure. You just have to measure like if it's worth getting into. I like getting in if it's worth minimum 80 pips, but that's just me. As you're starting out, like I feel like 20 to 30 pips is worth it, right? But you just, again, it's going to take some time to hold and actually follow through with it. But as you get more experience, it makes more and more sense. So how we took this sell, again, is from the left-hand side, and we're basing it off the same prices. So there was 1, 2, 3 opportunities to get in, again, on that same price. And we know this is a reversal area because of what has happened to the left-hand side, right? So based off of this is a counter trend, because on a higher time frame, if we go high, we know that this is an overall buy trend right now. It's a bullish trend. But based off the 4-hour, because we're working off the 4-hour, because the daily is, there's just too much information in one candle, so you want to break it down. So looking at the 4-hour is enough. But right now, this would be a counter trend trade because we're going against the trend. But what this means is like the current trend on the 1-hour and 4-hour is bearish right now, right? But that doesn't mean the overall trend is bullish, because we're just in a correction phase. We're in a counter trend. But that doesn't mean you can't take it. You just need to understand how long is this counter trend and how long is this sell gonna last, right? So based off this, if the 43 doesn't break, it's going to correct up. So it's only going to last a specific amount of time. In this case, that was, did I remind it? Yeah, I think I did. what date was this? Oh, 5th. Okay. Because this is a similar trade I took this morning. So I was like, wait, did I rewind this? So yeah, so on that, so that was Sunday to Monday. So that was only a day, right? So that's fine. But again, it's an overall bullish trend. So this sell is only going to last a specific amount of time. So if this 43 doesn't break, it's going to continue up and fill those imbalances. So, okay, it tried to break below. So we had one reaction here. It comes down, it manipulates, it takes out stops, and then basically it reverses. Okay, so we have one reaction here. I tell my people to never enter on the first reaction because it will always come down and manipulate. I always tell them to enter at the second or third reaction. So for example, like up here, this would be 1, 2, and then this is the third reaction in. You can take it at the second or third because it's done testing in, done taking out stops, all that kind of stuff. So this is a stop hunt, took all the stops out, manipulated, and then ended up closing. And then I said that imbalance needed to fill, so it ended up filling. Now, let's say you get out of your sell and you want to take a buy because this is a strong zone, right? Based off the left. Again, we're looking at the left. So let's look at the 4-hour. So from here, from this price, oops, I need the ruler. From this price, this was 155 pips. So we know this is going to be a big move just by counting to the left-hand side. So if you wanted to take out of your sell and enter a buy, you can. But you have to emotionally be stable and emotionally know how you're going to manage it, because I see people all the time getting in sells, then buys, and then they get stopped out, and then they're confused on their bias and so on and so on. You really have to know what's going on based off the numbers and what's happening on the left of structure. So if you can mentally handle going from a sell to buy, totally fine. If you can't mentally handle it and you're gambling and you're doing all these things, then don't do it. Just, get in the sell if you were there at that specific time, and then if it does buy, that's fine because you took one trade. I mean, just this trade for the average person was 150 pips. That's a 1 to 12. I feel like 95% of people can't get that, right? So that's a big trade anyway. You'd get out and be done for the week, essentially, if you wanted to be. But like I said, you can only switch from a buy to sell if you mentally can handle it. Okay, so it's filling this imbalance, broke above this minor structure here. So this 779 and 827 has to break above in order to head to the 44. And then the 44 has to break above in order to head to 1, 2, and then 273 and 305, okay? So again, if you were in a buy, you would make sure this structure breaks. It actually tested in, corrected, and then basically what ended, because, okay, so this was London. London was the move down. New York is the reversal. So it corrected and then ended up breaking and then coming to our 779 area, tapping in. So that would have been a 1 to 7 in the morning. And again, to get the second reaction, to make sure that you're not wicked out, you go down to you can go to 5, 10. The lower you go, the more price action you see. So this was the first reaction, then it came down and then closed. So basically, once it's done manipulating, and you guys have to back test this to understand how it manipulates. Once it's done manipulating, then you can enter after at the 43, like right here. Because if you enter too early, it stops you out. If you had a 30 pip stop, you'd be fine. But if you had less than 20, you would have got stopped out and then it would have went in your direction. So really, really back test that, replay that, and study it. Study the manipulations and the stop hunts because it's so important. So now we're following the trend, obviously the overall trend. So 779 and 827 have to break above, etc. So if it does, then we'll fill that next section there. Okay, so it's coming down again. It retested the 43. So tested into the 479, couldn't break above, then started to go down. Retested this 493 based off the left-hand side and came down again. So this is 3 reactions. This is 1, 2, 3. So remember what I said about my group members. I said I let them enter on 2 or 3 reactions, or I tell them that they should enter on 2 or 3 reactions. So this is a second reaction. It came up. It couldn't break below or above the major price, and then it came down again to test the third time. So if it's not breaking above your target here, you can take profit, or what you can do, like I said from the 778 and other videos, count down to different numbers, and basically if all these numbers are breaking below on a lower time frame, that is your key to get out. So add in as many prices as possible that make sense based off the left, and if these numbers are breaking below, that is your sign to get out if you don't feel like getting out. Or you can set a stop loss like anywhere between here to take some profit if you mentally don't want to get out, because there's some people that are like, oh no, I'll wait. Trust me, it's not going to break. It will return. So you want to get out when it's telling you to get out. So it comes down again for third reaction. Technically, you could re-enter here. And then basically the same thing applies, making sure this structure stays above, and then making sure that structure hits as long as this stays above. So let's just see if it does. Yeah, okay, it does. So it comes down, it tries to break below. Basically what ends up happening is it tests into this minor structure again. And then another thing too is when you're live trading like this, what you can do is you can add in numbers where price has rejected at the candlestick body and make sure those numbers are staying above. That's another thing you can do. Just in case like you're scared it's going to come back down again, just add in the numbers where price has reacted. And then if they end up respecting, then you're good. So they did end up respecting it, broke and test the 528. Okay, cool. We're past that full the major the major structure. So our target would be 779, 827. Okay, cool. It breaks and tests, but the 44 has to break above in order for it to continue. And this has to stay above. The 827 and 779 has to stay above in order for this to continue. Looks like it's going to break. Yep. Okay, so this gets tricky, okay? So let's just say, again, if you took profit at 144, that would have been, what was that, 1 to 6. If you took profit somewhere in here, that would have been like 1 to 5-ish. So basically 80 to 100 pip move. Okay, so this is where it gets tricky. If you're not following the direction, again, the direction is overall bullish. It's filling, looks like it filled that imbalance. Yeah, so 2 imbalances had to be filled. They're filled now. But this is where it gets tricky. They try and trick people. And also, depending on the times on this, 13, 14, 15, 16, 17, 5 o'clock. 1, 2, 3, 4. Yeah. So 5 o'clock, I'm so bad at 24 hours. So 5 o'clock, we don't trade at 5 o'clock. So we wouldn't enter this trade. This is a break and test of structure. And then, people would be like, okay, it's a break and test of structure. I'm going to sell, thinking that it could go, why is that? Okay, one sec. Thinking that it could go here. I mean, it's a possibility if it stayed below price, but it's leaning towards making new highs and going up and filling this imbalance, because it's already corrected, so it's ready. But let's just say, we're thinking about selling here because it broke and tested structure. Okay, but at this time, we aren't trading. We're not actively trading. We're only trading at specific times during Tokyo, London, and New York. So we wouldn't even take this trade. It would be irrelevant. Okay, so that's something that you have to back test and practice, is the times you're getting in. If you're getting in at a random time every day or every week, trash. Trust me, because that's what I did. Everything that I'm saying, I experienced, and I'm like, why did I do that? Obviously, because you're taught it, but it's like, it has to be very strategic what you're doing. So the times have to be right. What exact time are you entering at every day? So each pair should be the same time at each session. So like London, for example, London for me is midnight. And so I usually take trades. I find that if I take it at the start, it corrects higher, I'm in drawdown, and then, but if I take it at 2:30 to 3 a.m., I have no drawdown and it just goes. So that's the stuff that you kind of have to backtest and realize, okay, what time am I entering at to avoid this kind of stuff? Because it would go down a little bit and then basically it returns to the upside because it's bullish. But people get caught in this all the time. So did I. And I finally realized, I'm like, I wouldn't enter at that time anyway. So that's something to backtest. And then basically it just fills those both imbalances. But the craziest thing is it reacts to the same zones. I'm just going to replay this whole thing. It reacts to the same zones and numbers every freaking time. So it's your job to focus on those structures and to get them at specific times. Like, it's just insane how well it works. Anyways, so yeah, I hope that makes sense with the trend. So looking at the higher time frames for what the overall trend is, but we're looking at the 4 hour in regards to actively trading. And if we see a reversal area from the top and we can see that it was a previous sell, then we can get in the sell. That is a technical counter trend, but it only lasts for a specific amount of time because of the fact that the overall trend is bullish. But that doesn't mean you can't get in sells, because if it's setting up, you can. So I hope this made sense. If you guys have any questions, just comment below. Make sure you like and subscribe.